The first quarter of 2026 is in the books, and oh boy, was it an eventful one. So in this quick video, I'm going to cover everything that happened in the quarter, all of the major macro events, as well as update you on how major markets performed during the period. So we're going to start with a high-level overview of major markets both in the US and abroad. So January and early February painted an encouraging picture. Markets were rotating out of the mega cap tech names, so think the Mag 7, and more into value, cyclicals, and small cap. At the same time, the Supreme Court struck down the IEEPA tariffs, and that provided optimism as it removed one of the largest sources of uncertainty that was weighing on corporate confidence. So the first month and a half, first 2 months, the markets looked really good. Globally, markets were up almost across the board. International names were outpacing the US, but things looked good. We were getting a wider breadth of outperformance, so it wasn't just all associated in the Mag 7 huge tech names. The cyclicals were performing really, really well. And then small caps as well. Actually, small caps maintained their positive performance. However, the administration's rapid pivot into new tariffs blunted the relief. And then within days, the Iran conflict became the dominant market driver, and that sent things lower across the board. The March drawdown was notable for its breadth. The US-Iran war was a macro event that hit growth and value alike. Large cap growth declined alongside value as surging energy prices and Treasury yields outweighed any sort of style considerations. So when you take it as a whole, market was down in the US, again, mostly on the back of the US-Iran conflict. We have since popped up based on optimism of a ceasefire. And then you still had markets like the UK and Japan that eked out positive gains for the quarter. Now let's move into the US sector performance for the quarter. So the sector landscape in the first quarter was dominated by one overwhelming force, as you can see if you look at these numbers. It was the energy shock. So again, as I talked about on the last slide, earlier in the quarter, cyclical names outside of financials were doing well. So materials, industrials, energy, and some of the defensives did well as well. And it was the growth names that were getting crushed. They weren't getting crushed to this extent until the war occurred. However, you can see now, based on the quarter, they were down. Technology and discretionary in particular were down almost 10%. But energy was the only sector to post positive 1-month returns in March. The sector was up about 10.3% during that period. And it was the clear Q1 leader at 37.2%. Again, obviously a special macro case here with the war, closing the Strait of Hormuz led to this surge in oil, which translated into outside gains for energy equities as producers benefited from the supply disruption. Now, quickly, let's focus in on the growth trio of tech, communication services, and discretionary, as they bore the worst of the damage. The sell-off reflected the sensitivity of growth stocks in a rising rate environment. I'll talk about rates in a little bit here, but investors reassessed the sustainability of elevated multiples in a world where the Fed's rate cut path had narrowed materially. And now, talking about rates, the rate picture in Q1 was shaped by a few competing forces. So the Fed, largely on hold, they cut twice in a row. In the last few meetings, they have paused to reconsider things. Rising inflation expectations from the oil shock, and also just because inflation has stayed relatively sticky. But there was also a flight to quality as flows came into U.S. Treasuries during the March sell-off. However, it was not enough to offset sort of the oil shock inflation expectations on the rise. In particular, the mortgage market felt the strain. The 30-year fixed rate climbed 23 basis points to almost 6.5%. This really reversed a lot of hopes for sustained decline in borrowing costs and maybe freeing up some volatility in the housing market, as we're still sort of in a standoff where existing homeowners are not willing to lower prices to sell their homes, and it is really expensive for buyers to enter the market. So again, we would really need to see this 30-year mortgage rate come down in order to create some action. But yeah, broadly, rates up across the board in the quarter. A lot of it because of the Iran conflict. There were fears, again, of U.S. entering a war where their fiscal situation is not currently the best. That combined with, again, raised inflation expectations and the oil shock, that's why you saw rates rise. And then we'll talk about commodities really quickly. The big one here is obviously oil. Oil surged 76.5% in the quarter. Obviously, we're talking about this being driven by the Iran war's disruption to the global oil supply. The closure of the Strait of Hormuz removed roughly 20% of global oil supply, creating what the International Energy Agency called, and I quote, the greatest global energy security challenge in our history. Could talk about oil for a long time here, but moving on, gold, silver were up. I mean, if you remember, those were the big stories for a period of time. Their gains had moderated throughout the quarter based on a strong finish to 2025, but they were still up. Um, again, for a variety of reasons, inflation expectations, the war, any sort of flight to safety, you're generally going to see gold and silver perform well. And then just to note, alongside the other growth sectors, because again, I post this chart all the time, that Bitcoin is really correlated to the growthier areas of the market. Bitcoin was down about 22% on the quarter. And then let's talk about some of the big first quarter macro events. And I just realized actually that I missed one all the way back in early January. I forgot that this was the first quarter. There was just so much going on this quarter. The U.S. conflict with Venezuela, where we removed the President Maduro, that had big implications for the oil market. Obviously, now we see that that was just a drop in a bucket of what was coming later, but I did not include that here, but I did want to mention it. So we'll start at the top, the obvious one, the U.S.-Iran war. This was the single most consequential event of the first quarter, and that was the U.S.-Israeli military strikes on Iran. This was codenamed Operation Epic Fury. This campaign quickly escalated into the most significant Middle Eastern conflict in decades. In the last few days since the quarters ended, again, there is increased optimism. There was an agreed upon 2-week ceasefire that maybe this will be the end. Obviously, a lot of complicated things need to happen between now and then, but fingers crossed that we can put that in the rearview mirror as we head into Q2. The second thing, I mentioned this quickly, the Supreme Court struck down the IEEPA tariffs. So the Supreme Court ruled that the International Emergency Economic Powers Act actually does not authorize the president to impose tariffs. It is estimated that up to $175 billion will ultimately be refunded to importers. I'm unclear how that process is going, but supposedly the government is going to be sending a lot of money back to these businesses. President Trump did turn around and utilize a different act to then reimpose some of the tariffs, but it's a little bit different of a skew than it was before the Supreme Court struck these down. Number three, the Fed. This was also a dominant story for one part of the quarter. The Fed largely started holding rates steady, and Kevin Warsh was nominated as chair. So the Federal Reserve held rates unchanged at both its January and March meetings, which was a pause after 3 consecutive quarter point cuts in late 2025. During this period, Trump nominated Kevin Warsh, so the long-awaited decision was made to succeed Jerome Powell as Fed chair, and Powell's term is set to expire on May 15th, so about a month from now. I'm sure we'll be talking more about the Fed as that gets closer. Is Powell going to stay on the board even though he's not the chair? We'll see. There's a lot of questions that need to be answered. And then finally, we got to talk about AI a little bit here. The AI infrastructure boom continued amid some turbulence. So despite geopolitical turmoil, the AI CapEx cycle remained one of the most powerful structural forces in the economy. Hyperscalers continued racing to build out data center capacity, with committed spending running into the hundreds of billions. We'll see if this sort of spending spree starts to hit some headwinds, as investors are sort of looking for more and more returns to see if there's a sign that all of this money that's being invested is paying off. As of right now, these companies supposedly still lose a lot of money. The big AI companies We're thinking about an IPO maybe at the end of this year, early next year. So we're going to get a lot more financial information. Basically, how efficient has this CapEx spending been? I think that's a big question that the market is monitoring right now. So again, a lot of things happened in Q1. A lot of things to recap. Markets were all over the place. Things looked good in the beginning. The economy looked like it was improving. Employment was low. Inflation was sticky but moderating. And then the Iran war sort of threw everything into chaos a little bit. Again, hopefully that's just a Q1 story. There is renewed optimism that moving into Q2, this may not be as big of a concern. But if you want to stay on top of these things, the best thing you can do is one, subscribe to this channel. And number two, visit our website, themacroinstitute.com. We have a bunch of macro investing training programs that will teach you how to invest across all of these different types of macro events in different economic backdrops. So again, things like cyclicals outperforming in the beginning of the year. The big story there was a lot of pent up stimulus. We teach frameworks for how to track those things. If you're interested in this, go to our website, check out some of our different training opportunities. And I hope you have a great week. Thank you for being here. Again, don't forget to subscribe to the channel, and I will see you next week back here for another Macro Monday video.